Before we get started, we just want to thank Old Republic Surety for sponsoring this episode of Let's Get Surety, as well as NASBP virtual seminars. For more information on Old Republic Surety, visit www.orsurety.com. Now on to our show.
You're listening to Let's Get Surety. Let me hear your bonding talk with Kat Shamapande.
Hey everyone, it's Kat Shamapande. Thanks so much for joining us for this episode of Let's Get Surety. I'm excited to have with me my co-host, Mark McCallum, CEO of NASBP. Hey, Mark.
Hey, Kat. It's always my pleasure to be with you.
We got an interesting topic to dive into today.
We do.
We do.
An important topic.
We are going to be talking about the Financial Account Standards Board and the Private Company Council that's a part of that.
There's a big words.
There are a lot of big words.
FASB acronym.
Yes.
But pretty important, organizations and efforts.
And I don't think we could have a better guest for this conversation today. We've got David Pesce, head of Surety with Munich Re Specialty, North America. Hey, David, thanks for being on.
Thanks for having me. Appreciate it.
So, David, before we dive into this big topic with a lot of words, can you just tell me a little bit about yourself and about Munich Re Specialty?
Okay, sure. I'm now 39 years in the
Just
surety
starting
business.
out.
Just starting out. I got to stand up earlier. So always on the company side.
Yeah.
And now running Munich Re Specialty. We're a relatively new player in the primary surety, big reinsurance company.
Yeah.
One of the largest on the planet, actually. So, but we've started a surety operation about 3 years ago and continuing to build that out.
That's terrific. So I guess to start us out, maybe can you tell me a little bit about FASB and what is it?
So FASB is the Financial Accounting Standard Board,
Yeah.
as you know, and there's actually FASB and then GASB, which is the Government Accounting Standards
Oh,
Board.
okay.
And they set the what is known as GAAP, Generally Accepted Accounting Principles. And they set all of the regulations and rules for how financial statements get prepared.
So I can see why that'd be very important to people in surety.
Absolutely.
Yes.
Absolutely. And primarily, when FASB considers accounting regulations, they look at how they apply to publicly traded companies, right? Because that's where you have all your investors, lenders, and things like that. About 12, 13 years ago, there was enough noise and chatter from the accounting world saying, hey, there's like 4,500 publicly traded companies, and there's like 4.5 million privately held companies. And a lot of these regulations are just too difficult for a privately held company to apply and to apply these standards to their financial reporting. So the FASB put together the Private Company Council, the PCC.
Okay.
And the PCC's primary role is to advise FASB when they're coming out with regulations as to whether we think that's going to work for private companies, or whether it may be too burdensome to apply to private companies. So they formed the council now, 12, we're coming into our 13th year.
So who makes up this PCC council?
Right. So the Private Company Council is made up of practitioners, CPAs, preparers of financial statements, and that's usually like your CFOs, controllers, and things like that, and then users of financial statements, banks, and fortunately for us, sureties. When the PCC was formed, they actually had a member, a man by the name of David Lomax from Liberty Mutual Surety.
Yeah.
Right. So David was on the council for 6 years. And then when he was coming off, he knew I was interested in getting on. So David reached out to me and said, would you be interested in getting on now? It's a 3-year appointment. And then you can be reappointed for one more 3-year stint. Then you're off on your way.
So how long have you been on
I've been on it for 4 years now.
Okay.
So I got 2 more years to find somebody else in the surety industry that wants to join. If you're listening and you want to join the Private Company Council, reach out to me.
Send Dave an email.
So, David, who are the largest consumers of financial statements?
So it's interesting.
Private companies.
It is banks and sureties.
Okay.
And that's one of the reasons. And the PCC originally had not really realized how big the surety industry is, and how much we use the financial data, and not just for construction. Again, in most people's minds, this is, surety is construction. And they now know, well, no, that
Right.
2/3 of the surety is construction and 1/3 is commercial.
Yeah.
And that's a lot of privately held manufacturers and other entities like that, even janitorial services and all this.
Yeah.
So they've been really pleased to have surety people on. At times, they even think we might use the financials more than the banks do.
banks?
Oh,
Because
okay.
banks are traditionally getting financials
Right.
once a year
Yeah.
and then getting, certificates of compliance and things like that. We're getting financials constantly through the
Yeah.
course of the year and sometimes multiple times per year from CPAs.
Yeah, I mean, kudos to them for understanding they need to maintain connections and receive that feedback and
Yeah.
input
Yeah.
from those consumers, the
Yes.
users.
Yes. And that's really a lot of what happens. Where, so the private company council, we kind of have three things that we do, right? So
Mhm.
we're an advisory board to FASB, and we're also representing these private companies and the CPA firms that are out there to come up with alternatives if it doesn't apply. And
Mhm.
over the past 12 years, you've seen a number of alternatives that private companies don't have to adopt these certain accounting standards. Then we're involved in what we're doing here. We're involved in outreach,
Yeah.
right? So we're now involved in reaching out to anyone that's out there that's associated with financial statements. We have a big relationship with AICPA, with RMA, the Risk Management Association, with
Yeah.
SFAA, CFMA, Surety, NASBP, anyone who's really out there using financial statements on a consistent basis.
That makes sense.
Yeah.
So with Surety being such a big consumer of financial statements, are there several active Surety professionals that are on the PCC?
No, it's only been one
Oh,
each
really?
time. There's
Okay.
2 bankers and 1 surety person on it right now.
So you got
That's
it's
a lot to shoulder there,
Yeah,
David.
really.
Well, I mean, I met Emilio Alvarez about 3 years into my career, and he mentored me in accounting.
Ah.
So he'd be happy to tell you on his own podcast, that I probably know more about accounting than most. And, look at everybody
Right.
that's in surety has
Yeah.
their specialty.
Yeah.
Mine has been on the accounting side because of my long friendship with Emilio. So this was really natural for me and,
Yeah.
and very interesting because there's very little construction that goes
Yeah.
on in this, right? We
Right.
just recently had one we can talk about in a little bit, but
Yep.
most of this is associated more with the commercial surety side
Right.
and with larger companies and things like that.
I mean, to that extent, do you think they'll expand it to more than one surety representative?
I
on
think
the-
they'd be happy to if
Okay.
they could get more
the
than
right
one,
fit,
get
yeah.
the right fit.
Yeah. It seems like
Okay.
having maybe a commercial Surety person and a
Right.
contract would
Yeah,
be great
would be really
for
good.
this.
And that was a part of our outreach with SFAA too, was
Yeah.
to say, hey, get your contract committee and your commercial surety committees
Yeah.
and let us talk to them so that we can try and find some people who might be interested to
Right.
come on board.
Yeah.
Yeah.
That's great.
So, I mean, their standards making seems to keep marching on, right?
Yes.
So there's
Yeah.
always a need for that input, that perspective.
Yes.
Is that true? And
Yes.
anything big happening recently?
Well, so
in that
for
regard?
from the surety side, the biggest thing was when they did ASC 606, right? So
Yeah.
the new revenue recognition standard. There was a little thing buried in 605 plus 606 that related to retainage
Okay.
and overbillings. And they reworded everything. I'll try and be brief on it, but now you have 2 types of retainage. You have regular retainage,
Right.
which is subject to nothing but the passage of time to collect it.
Yeah.
And then you have what is now known as conditional retainage. This is what we're all used to is, the 5% retainage throughout
Yep.
the course of the job. But if you have to finish the project, that's more than just the passage of time. So now conditional
Yeah.
retainage was pulled out of receivables and created as a contract asset. That's ASC 606.
Yeah.
ASC 605 says, oh, by the way, you cannot have a contract asset and a contract liability on a financial state, on a project,
Project.
right?
Okay.
At a project level. So an overbilling
Yeah.
is a contract liability. So now the CPA world all of a sudden realized, oh, if we have a job that's overbilled and has conditional retainage, we have to show it net on the balance sheet. So if you had $1 million of overbillings and $500,000 of conditional retainage, you would show a $500,000 contract liability.
Okay.
It created a lot of issues because the users, the
Yeah.
sureties of the world,
Right.
we couldn't follow the over and under billings and retainage anymore.
Right. Which
because
is
it
what
was
sureties
netted
are
together.
looking at.
Right.
Yeah.
Yeah.
Through outreach, with a number of people, including AICPA and a peer review conference that I attended, they brought this up and said, listen, this has to be fixed.
Yeah.
Like we have to do something. And so recently, just a few weeks ago, they released kind of a clarification for everyone, public and private, that we brought up through the private side saying we want a private company exception. And they, after research, they said, you know what, we can make this for everybody.
Oh,
and
really?
what they did is they came in and said, listen, we're not going to change the standard,
Yeah.
but the standard does not restrict you from providing further disclosure of what you did.
Okay.
Right. So now you can show it, the net number on the balance sheet. You
Right.
can show the two numbers separated on the balance sheet. You can show it in the notes and disclosures of the financial statements. There's nothing to say you can't fully disclose how you got to that final netted number. And so it provided that clarification. There were a lot of CPAs out there there was a diversity of practice, they call it. Half the firms were following the regulation,
Yeah.
and the other half were not.
I mean, I think that's really fascinating. And
It is.
so you're not only involved in addressing standards, but then when you see the need, you're providing context or, as you
Yes.
said, clarification.
Yep.
And how important that is.
Yes.
Yeah.
Yes. And there's a number, look at another one that we're working on now
Yeah.
is the leasing standard, right?
Yeah.
So the
Yes.
lease
Yep.
standard changed and now leases are shown on your balance sheet. And that was a big
It's a
deal
big
for
change.
everyone.
Yeah.
Well, and here we are now 4 years later,
Yeah.
and there's still so much chatter about how difficult leases are and the expense that private companies are having to go through annually to do this lease accounting, that FASB has created a new committee on with the Private Company Council participating
Okay.
to look at this and how it's applying to private companies and whether they might want to reconsider a private company exception, a change to the regulation to make it more affordable.
Oh, that's great. So you're really doing a lot of good work to make sure that the financials that are out there are working for sureties and for
Yeah.
private companies and banks and everyone.
We use something called the Private Company Council Decision-Making Framework. Okay. And this is part of our charge, which is to look at the framework and say, okay, simple things like, is this a problem for private companies in their
Yeah.
accounting, right? Is it a problem for their CPAs? Is it a problem for the CFOs? Is it a problem for the users? Any one group, multiple groups? And then what about the cost benefit of this? Is
Yeah.
there an enormous cost with no benefit to, say, the user? And so we build this all into this decision-making framework to make our proposals back to FASB before they enact these changes.
And it sounds like it's working because you're talking about
Yeah.
the changes that are taking place because of that.
Yeah. Yes. It's been very good. And the Private Company Council, we're coming out now, it's 12 years, 13 years, but
Right.
We've come to the realization as the council and with FASB of saying we need to let people know who we are, what we do, so that we can get more input from
So
out
much
there.
like the surety industry, you don't want to be a best kept secret.
No.
Well, it sounds like critical work, and the fact that they're listening, hearing, and then taking action.
Yes.
Do they have certain priorities going forward, particularly ones where you feel like the surety industry needs to be aware and having input in?
Right. So every year, the FASB themselves, they create what they call their agenda priorities, right? Through the outreach, we find out what the various stakeholders, what their issues are, and then we bring them back in. They look at them, they create their agenda priorities. Then when they bring them to the PCC to say, here's some of our agenda, here's 15 items
Right.
that are agenda priorities for us. Any of these want to be your agenda priorities so that, some of them we come in and say, that's not, no problem. If you want to do that, it's not going to be an issue. And sometimes we're going to go, that one, yeah, we want to.
Yeah.
A good example of that is recently something called CECL, the current expected credit losses. Essentially, that's a new way of doing an allowance for doubtful accounts.
Oh, okay.
Okay. They changed it. It's not working well for construction companies. It's not working well for a lot of small businesses because the way it's written, even if you collected the money already, you still have to do a CECL calculation on it. So we went in and said, listen, like most small businesses, their receivables turn in 30 or 60 days and the financials come out 90 to 120 days later. So you're making this accountants charge money to do a calculation
adding
on
burden
something that's already been collected.
That's already.
So through our work with them, they just released, again, for private and for public and for nonprofit entities. They said, listen, if the money's been collected, you don't have to do a CECL calculation on it anymore.
Well, geez, thank you. Yeah, kudos. Yeah. Yeah. I mean, those are great real world examples of why the surety industry needs representation.
Right.
And you mentioned, you enjoy it, but you don't want to be there forever.
I can't be there forever.
Yeah,
Even
yeah.
that's,
You might want to, but
I might want to, but I can't.
So if a surety professional is interested in that, what should they do to express that interest?
Well, actually, the first thing you can do is go to FASB's website, get to the Private Company Council. There's actually an application you can
Oh,
you
okay.
can go in and just say, hey, I'd love to be on the Private Company Council at any point in time.
That's pretty
And,
easy.
we
Yeah.
rotate. We have a group it's about 2 or 3 of us that rotates off each year,
Okay.
right? So it's not all of us at once, and
Right.
so we have some continuity through the years.
It's terrific.
So,
So they
you
can
know.
find out more about the council on the website
Yes.
as well.
Yes. Yeah.
That's
There's a whole site on there, and there's a lot of information. We just had a whole report on the efficacy and the viability of the council, which everyone came in and said, yeah, we need this. And the biggest issue was you need to let more people know who we are.
Right.
Yeah.
So, everybody's busy. So just kind of characterize, like, what is the level of commitment?
Mm.
And is that always an in-person, or is it virtual, or both?
So there's 4 meetings per year. Essentially, they take about a day and a half. 3 of them are in person in FASB's offices in Norwalk, Connecticut.
Okay.
And then the one that's the spring meeting around March, when all the CPAs are in busy season, we do that in a 1-day virtual. It's very interesting because, again, you have to, when they come in and say, okay, we're going to, adjust CECL,
Yeah.
or we're going to put CECL out
Right.
for consideration,
Yeah.
right? You have to read everything that they've put in together. And look, it could be 30, 40 pages of reading. So it's an hour or 2, maybe 3. For those of us in the surety industry, they'll reference the accounting standards codification and, like I said, ASC 606. I might say, ASC 606, paragraph 300, section 2I is the problem. And then
Yeah.
you've got to go, but that's all online and you can find it
Okay.
quickly. But it's been nice to get an education a little bit more on what accountants do, how this all works,
Right.
and how it applies.
So it's not necessarily a heavy lift for
It's not.
someone who wants to.
You really like accounting and numbers and crunching and again, a lot of this has to do with financial disclosures, what's in a
Yeah.
financial statement, what's not. We had one recently they're going to change how you report your federal, state, local, and foreign taxes that you pay. Right. And so then they brought it to the Private Company Council, and we were debating it and talking about it, and finally realized, 85% of private companies are pass-through entities, and this
Yeah.
does not apply.
Yeah.
So really, and the ones that are not pass-through entities, the C corporations, probably should have this subject. It's not going to be that big a burden for them anyway. So again, that's actually related to a footnote disclosure, not to actually how you do the calculation,
Okay.
but still part of what the PCC does.
Right. Wow.
And through that work, you're making sure sureties have the information they need in a way that works for them so that we can continue writing bonds.
Yes. Yes.
Well, and and thanks to the PCC for their outreach back to the industry.
Yeah.
So they're not just sitting there hoping that people will find it out, that they're coming out to industry, as you said, various groups, including SFA and NASBP,
Right.
to make sure that they're getting what they need in the way of
Yes.
perspective.
Yep. And again, I think the other point I'd love to make is that if you're out there, if you're an agent, if you're an underwriter, if you're a CPA in the surety community, and you don't like something that has to do with the way things are done in the accounting world,
Yeah.
you have a place to go. You need to get to FASB, and you can send them letters.
Yeah.
They love that and say, hey, look, this is a problem. This is not working.
Yeah.
Here's why. And then they take it and see if they need an agenda topic on it.
That's
point.
great. There's a
Yeah.
course of action.
There's a course of action for everything.
Awesome.
Yeah.
Well, Dave, it has been great having you on with us today and
Yeah.
talking about FASB and the PCC.
Great.
Hopefully we'll get you on again.
Yes, for something
sometime.
else, maybe.
Yeah.
Yeah.
But thank you very much. We appreciate it.
You've been listening to Let's Get Surety. Brought to you by the National Association of Surety Bond Producers. For more information about the NASBP and its members, visit nasbp.org.
Before we go, we just want to say thank you again to Old Republic Surety for their generous support in sponsoring this episode of Let's Get Surety. For more information on Old Republic Surety, visit www.orsurety.com.